Easily the most asked question when it comes to trading and investing is, how much money do I need to actually start trading? And when we're talking about trading, I'm talking about becoming an active trader. So you're actively trading stocks, options, futures. How much money do I need to actually fund an account? How much money, what is the minimum amount of money I need to actually make this thing work? Some of you guys ask me questions with specific amounts of money in mind, like, hey, I only have $200. Can I trade with $200? Or, hey, I only have $500. Can I trade with $500? And I'm just going to go ahead and tell you right now, no. If you're one of these people asking the question, can you trade with just a few $100s? Absolutely not. It would be irresponsible for me or anybody else to actually tell you yes to that question. Although I know some people on the internet will tell you, yeah, whatever amount of money you have, you can trade with it. And technically, yes, you can trade with any amount, no matter how small of an amount of money. Yeah, you could technically trade with it, but you're going to be at such a disadvantage that there's no possible way you could actually ever really win at that game, because you're essentially hamstrung right at the beginning. First of all, you need to know that in order to open a standard trading account, so we're talking about your standard Reg T margin trading account, you need $2,000 to actually fund that account and get approved for margin. And you're going to want to trade on margin because that gives you much more buying power. And they're not going to give you a standard Reg T margin account unless you can deposit at least $2,000 into your trading account. And although it only takes $2,000 to open a traditional trading account, a standard Reg T margin trading account, I don't think that $2,000 is a good amount to start actively trading with. I think that is far too low. In my opinion, I think you really need a minimum of about $10,000 to begin actively trading in a responsible way. Because if you have less than $10,000, you are so limited in the underlyings you can trade, because you have to trade really low priced underlying stocks. So most of those are going to be really garbage companies. They're not worth trading. They're the kind of companies that typically decline in price year over year. They're typically the kinds of companies that are much more likely to go bankrupt as well, but you're kind of hamstrung. You really can't trade good companies because you don't have the kind of money to trade the good companies, because the good companies typically have higher share prices. Having a small account really limits you on the strategies that you can use. For example, with options, if you have a really small account, you can't really accept assignment on a naked short put or naked short call or a strangle, because you just don't have the account size available. You don't have enough money to actually accept assignment if your short put gets assigned or if your short call gets assigned. For example, if you're trying to trade with an account size of only $3,000, let's imagine you sell a put on a stock that's $40 in price, and that put goes against you. You actually can't accept assignment of those shares. You don't have enough money to actually buy 100 shares of a stock that's $40 in price, because you've only got $3,000 in your account. So you're essentially, you have to forget undefined risk strategies totally. So you can't do your naked calls, naked puts, naked strangles. You're probably limiting yourself to defined risk trades like vertical spreads and iron condors, which they're defined risk trades, meaning they're low risk, low reward kind of trades, which for a really big account, somebody that's got a large amount of money, that's the kind of trades you want to put on if you're trading with, for example, you have a $2 million account, right? You're trying to protect your money, so you like those defined risk trades. But for somebody with only a couple of $1,000s in a trading account, you actually should not be trading those low risk, low reward kind of trades, because they're not going to get you very far. You're still going to have a small account in 5 years. If you're trading with a really small account, if all you're doing is vertical spreads and iron condors, you're not going to be able to grow that account as fast as you would be by taking a little more risk. And those undefined risk strategies, they actually make more money. You risk more to make more, and that's really what you need to actually grow an account fast. But again, you don't have enough money to do that in the beginning. So I think $10,000 is a great starting place as far as the minimum account size you need to start trading. Anything less than that, you're just going to be way too limited, as far as you're not going to be able to trade a lot of the underlying stocks that you'd want to trade. You're not going to be able to trade strategies that maybe you want to use. But $10,000, that starts to get to the point you're still limited on some stuff, but at least with $10,000, you can comfortably trade naked options on stocks that are, $40, $50, $60 per share. And even if those short naked options, like a short naked put, even if it got a sign, with $10,000, you could actually afford to buy shares of, for example, a $50 stock. And while I think, you should have at least $10,000 as an absolute minimum to begin actively trading, in an ideal situation, you really want at least $25,000 in an account before you start actively trading. And the reason is because the $25,000 mark, that gets you out of the pattern day trader rule. So in the world of stock trading and options trading, there is this really annoying rule that we have to navigate around. It's called the pattern day trader rule. Pattern day traders, what FINRA considers a pattern day trader, is anyone that makes 4 or more day trades within a 5 business day period. Now, what is a day trade? Well, a day trade is any trade that you open and close within the same trading day. So if I open a trade right now, today, and I close it before the closing bell today, that's considered a day trade. Now, if I open a trade today, but I close it tomorrow, that's called a swing trade. So any trade that you open and close within the same trading day, that's a day trade. Any trade where you open a trade one day and then you close it at some day in the future, that's called a swing trade. And the pattern day trader rule, what it is concerned with are those day trades. You are actually not allowed to day trade if you have less than $25,000 in your account. The pattern day trader rule, what it states is that if you make 4 or more day trades within that 5 business day time frame, your account essentially becomes locked. So to avoid your account from being flagged by this pattern day trader rule, you really only have 2 options. You either keep $25,000 or more in your trading account, and then you can make all the day trades you want. Or if you're under $25,000, you just make sure you never take that 4th day trade within a 5 business day period. You can take 3 day trades is fine, but when you take that 4th one, it's game over for your account. Once you get your account locked, you're no longer able to place new trades. They will allow you to close any existing trades that you still have on. So you can always close a trade, anything that you still had on, but from that day forward, you will not be able to open any new trades unless you get your account above 25,000. Now, you do have a get out of jail free card. You are allowed 1 reset of a pattern day trader rule violation. So if you violate the pattern day trader rule one time, so you make 4 or more day trades in a 5 business day period, your account gets locked, you can request your broker to give you a reset. They'll reset your account. Your past violations go away. You start afresh, right? But here's the thing. You only get that 1 reset. If you violate the pattern day trader rule again, there's no more get out of jail free cards at that point. And that's actually kind of a new thing. When I first started trading, brokers would allow you all the resets you wanted. You couldn't get a reset 90 days within the last reset you had. So you always had to wait like 3 months and then you could reset your account, but you could violate it again, then you could reset it again. 90 days after that, they no longer do that. Now it's just a hard limit. You get 1 reset only. Now, having explained the pattern day trader rule to you, I think you can see why $25,000, why that is really the threshold you want to get to, right? That really, in an ideal world, that's the minimum amount you really need to start trading in a serious way. If you're below $25,000, you're just going to be in such a bad spot because you're not going to be able to open and close trades within the same trading day. Even if you're in a bad situation, for example, you put on a trade and it goes against you in a big way. Or here's a perfect example. You put on, say, 4 trades today, 4 new trades, and that day you put on those 4 new trades, they're all bullish trades. And let's say the market had a crash that day, because every few years the market does crash, and it crashes hard. When the market crashes, pretty much everything crashes. There's no exceptions. Everything goes down, including those 4 new trades you just put on today. And you want to limit your losses. You want to go ahead and close all those positions. But if you're under $25,000, the pattern day trader rule. You can't close those 4 positions. You could close 3 of them, but at least one of them you would have to leave on, even though it's exposing you to even more risk by having to wait till the next day to potentially close that trade. But you're kind of, again, you're kind of hamstrung by this idiotic rule. This pattern day trader rule, it's idiotic, it's moronic. Nobody likes it. Nobody within the financial industry likes this rule. It's kind of ancient and archaic. I think in the beginning, when this rule was first implemented, they did it in the guise of, we're trying to protect people from day trading, but they didn't realize what this rule actually does. It actually hurts you as a trader. It actually puts you at even more risk than what you should be exposed to. Now, I know $25,000 is a lot of money. Not everybody can afford to start trading with $25,000. And that's why, my absolute minimum recommendation is actually $10,000. I think that's a much more comfortable place for most people to start with. But if you start with less than $25,000, just know the pattern day trader rule, it's going to apply to you, and you have to be careful. But there are some things you can do to get around the pattern day trader rule. The first thing you can do, and the most obvious thing you can do, is simply just don't ever take a day trade. Never open and close a position within the same trading day. It should only happen in extreme emergencies where something really bad happened, right? Or like you entered a trade that you didn't mean, you placed a mistake, or you had a situation where you opened a trade that day and it went hard against you. You really want to get out of it to prevent an even greater loss. But this is something that should be an extremely rare occurrence. And again, you can't put on more than 3 of those day trades in a 5-day period. If you get to number 4, your account's going to be locked. One other thing you can do is, instead of trading stocks and options on stocks, trade futures and options on futures, because oddly enough, the pattern day trader rule only applies to stocks. It applies to equity, so anything with shares, so stocks, ETFs, and also options on stocks and ETFs. All those fall within that pattern day trader rule. But futures don't apply. You can trade all the futures you want. You can day trade all the futures you want. That does not count at all to pattern day trader. Same thing with options on futures. Options on futures do not apply to the pattern day trader rule. Now, the problem with trading futures and options on futures, if you have a small account, is that most futures products are very big products as far as notional amount. If you have a small account, you actually can't trade like 95% of the futures products out there that are available, that are probably on your trading platform. Because if you have a small account, you don't have a big enough account size to actually trade those products. So even though technically you could get around the pattern day trader rule by trading futures, most futures are just way too big for somebody with a small account to trade. So it ends up being a situation where, again, if you got an account under $25,000, do whatever you can to get to that $25,000 mark and just avoid that pattern day trader rule altogether. If you want more information about how to get started with options trading, check out my book, The Super Wheel Options Strategy, available on Amazon. You'll find a link to that book in the description below. Peace, guys.